What's up everyone, welcome back. If it's your first time here, great, thanks for checking out the channel. We're about to go through the markets today and see what the price action is really telling us. See what are the key levels and if there's any bullish or bearish edge on these charts. So not much action today ahead of the FOMC. We're likely to see a hawkish Jay Powell, 75 basis points hikes, and with that said, just going through the markets real quick. S&P was down 0.41, Nasdaq was down 0.89, Russell was actually up today 0.25, and the Dow was down 0.24. Starting with the S&P today, not much has changed. I do think you are seeing some pausing. Traders are not confident at the moment going into the FOMC, but as it stands right now, you haven't done anything technically to break down the bullish bias. You haven't invalidated this bullish engulfing candle that took place on Friday the 28th. You're still above it. Only time to start flipping to be a little bearish is when you break down below 3806 on the S&P. I still think you're about to complete this wave structure up to the 886 retracement from this previous high. You're still on the right side of the breakout line of the trend. Let's take a look at the 4 hour. The 4 hour, however, is doing something slightly different. You are butting up against the 200 moving average. Also, as it stands, you are creating a little bit of some bearish divergence on the MACD. You have one high, slightly higher high, one high, slightly lower high on positive momentum. This could usher in a slight reversal as you are getting rejected at the 200 moving average. Looking at the Nasdaq, there is this still slight idea that one high, second high, one high, higher high on momentum without getting back above these levels is creating some hidden bearish divergence. You can also slightly see it on the RSI. One high, second high, higher high in momentum. No matter how hard buyers are trying, you're not able to push prices back above these highs. You want to see price get back above these levels in order to continue some bullish momentum. As it stands right now, you have not invalidated this bullish engulfing candle from Friday, and you are at the bottom of a range, potentially creating this momentum shifting structure at inverse head and shoulders back at a serious inflection point where it's been resistance and support all the way back from July 2020 and September 2020. Looking at the Dow on the daily, we've been kind of following this for the last couple of videos. You're at the top of the range on this downsloping parallel channel. What happens technically when you reach the top here? You're overbought. Yes. So as it stands currently, you're overbought in a downsloping parallel channel. But what are you doing? You have backtested the 200 moving average, attempted breakout, rejected, and still holding back above the 200 moving average on the daily. Bullish consolidation? We'll have to see what the FOMC brings tomorrow. Looking at the Russell on the daily, you're almost at the target one of this bullish breakout of the supply line. Potential double bottom had ushered in a nice reversal to the upside. Your target is the 200 moving average, the 618 retracement from previous swing high to low. You're almost there, and depending on what the rest of the week brings in, potential target 2 is back up here, area of confluence of support and resistance dating back from December 2020. That's target 2. Momentum's beginning to wane slightly. Too early to call it, as it's just one day of slight selling pressure right before the FOMC, so understandable. You are in the bullish control zone on the RSI. You are likely to continue and test this 200 moving average. You've made it all the way here from the breakout. I don't see why you don't complete this pattern. Alright, so taking a look at the VIX, we've actually been watching this since we broke down the supply line and this historical support and resistance area. We also bearishly backtested it, and now we've seen the bottom of the range. Also, what we did is we broke below the 200 moving average on the daily, and buyers tried to get volatility back above 200 moving average, couldn't hold it, broke back down, and now you're bearishly backtesting the next level of inflection. This could see some follow through back down to the downside of this next historical support resistance at 2484, or the bottom of this demand line dating back from Tuesday, June 29th, 2021. So something to keep in mind. Taking a look at the dollar, you haven't been able to get back above these levels. We've been watching this also since we bearishly broke down of this supply demand line. We have not been able to get back this local level of inflection where it's been resistance, support, resistance. I think the real story is on the weekly if we're looking at the dollar. If you just zoom out, you know, we're at the top. What we just spoke about on the Dow Jones is you're at the top of the range. And what does it mean when you're at the top of the range? You're overbought. So hitting top, seeing follow through to the downside. You also, what do you have here on your oscillators? One high, second high, third high, one high, lower high. Same levels, which is going to be hidden bearish divergence, being that you have one high here, significantly higher high than the previous high, with the same levels of positive momentum is a form of hidden bearish divergence. You also see it here on the RSI, one high, second high, lower high, third high, potentially lower high slightly, or could be considered the same high here on the RSI. So definitely bearish divergence going on at the top of a supply line at a level of inflection. So let's see if there's any more follow through to the downside. We do have important days coming up this week. We have more earnings, we have more economic data, and we have the FOMC. So should be fun, should be a lot of volatility in the markets, and you are still actually building on the weekly negative momentum on the MACD. I do suspect if you can't get back above these levels, you will see the bottom of the range at 107.88. Taking a look at US oil on the daily, we are now visible a inverse head and shoulders on the daily at the bottom of a range after a significant markdown. You have now made your first higher low since June of 2022. One low, higher low, one low, higher low. You want to see this break the neckline, usher in a reversal, but the 4 hours doing something even more interesting. So we've been talking about this 4-hour inverse head and shoulders for about a week and a half now. You did have this bearish Gartley actually play out. We did think that this would come down and test. The 200 moving average came down. Price reacted off of this. Wow, you're at your moment of truth. You're either going to break this neckline and break this level of inflection, or you're going to sell back down and go for a type 2 return for this bearish Gartley, which would usher in back down to the bottom of the range. So definitely areas to pay attention on US oil. Is there any edge on the oscillator? Well, well, well. What do we have here? One low, lower low, one low, higher low, one low, higher low, one low, lower low. So as much as the selling pressure has come in on US oil, sellers have failed to make a lower low than their previous low. This is a form of hidden bullish divergence now that you're seeing positive momentum begin to build on your MACD. RSI is in the bullish control zone. Flipping back to the daily, even just looking at this complex wave structure here, potential M shape. Let's see if it's anything formal. You have your X, your A, your B. So B is too shallow, unfortunately, to be anything formal. And the 786. It's beautiful. So a little too shallow. So when you're looking for a bullish Gartley, you'd want to see a retrace down to at least a 618. So your X, your A, your B is at a 618. And your D ends at a 786. So close, but it's definitely a complex wave structure. So you really want to train your eyes to look for these M shapes, right? Your X, your A, your B, your C, and your D. And what you want to do is anchor your points from significant discernible swing low, swing high. So, and when I say discernible, I mean you want all market participants to understand that this is recognizable on a significant time frame, and all traders can recognize these patterns. It's not something that, oh, you know, maybe it's this. It's what's discernible to all market participants. And you definitely have your swing low, your swing high. undeniable, right? So this is where you would anchor at your lowest point here, your X, your A. Now you look for your B point, which would be the retrace from this swing low to swing high. And unfortunately, you didn't go deep enough to be anything formal, but definitely a complex wave structure here, XABC. So let's see if this ushers anything in. You do have the potential momentum structure building here that could usher in a new reversal on US oil. All right, taking a look at gold on the daily. So kind of a disappointment. You attempted a breakout from last week. So last week on Friday, while everything was pumping and soaring with gold showing some bullish divergence on both oscillators, what did you end up doing? You broke supply, broke back into it, and attempting to break back out and just getting rejected again. I just don't see why anybody wants to own paper gold at this point. Physical gold, sure, it's great. But right now, owning this asset when you can own so many different other assets that are showing accumulation signs at pattern completion zones with bullish divergence on both oscillators after seeing a Japanese reversal candlestick. There's just so many other assets you could own than gold at the moment. So good luck, gold. I wish you the best, but it's just an underperformer right now. It's very disappointing. Looking at silver on the daily, actually has a positive story over gold for sure. You still have these signs of accumulation, one low, second low, third low, and we've been talking about getting back above 19,846. Once you do that, we can talk about the B word again, but right now we're just cautiously optimistic for silver. This could be some accumulation happening. You haven't broken down below these lows. Your hidden bullish divergence actually has manifested into some higher prices, but you want to get back above 19,846 and then back above this local high here and put in a higher low, higher high. That's what we're looking for. You did see some increased volume coming in, but again, you know, it's a tricky week with all this economic data and all of the earnings still happening. Let's take a look at ARK. So ARK on the daily, actually, what you're doing is you're putting in a bullish shark and you're at the pattern completion zone still with triple bullish divergence on your MACD. Your RSI is in the neutral zone as it stands, but you have seen some follow through on price from these low levels. And when you zoom out and take a look, what have you actually done on ARK? You've actually done a full reset from your COVID crash lows from March 2020, December 2018, and November 2017. You're at these same lows, which historically have found support. Buyers have defended these levels for years. And what have you now just done at this level, right? You have this bullish harmonic after a breakdown from the bear flag, holding support with your bullish divergence on both oscillators in neutral on your RSI. So cautiously optimistic again on this one. I think the story gets a little more defined when we break it down on the 4-hour. So I do think you have this new potential wave structure developing. If we can see the X, the A, the B, the C, pattern completion zone on D is about 44.89. So this would be your first profit taking level. This possibility becomes more real once we do break the B point of this pattern. So get back above 40.82. Look for this pattern to complete at D. That's your first stop. Second stop, if you want to get real bullish, is going to be the 113. Incredible. What confluence. So let's see what the markets bring. If we do see this bullish follow through, first stop's the 886, second stop's the 1.3. Okay. All right, so I really wanted to bring Google to your attention. I think the story on Google is more apparent on the weekly. Right now, as it stands, you have a bearish engulfing candle engulfing last week's price action back below the 200-week moving average, as you're seeing increased volume on selling pressure with negative momentum beginning back to build. RSI definitely in the bearish control zone. Yikes. Google, big yikes right now. You don't want to see you close below this 200-week moving average. You do have a few days left. You have FOMC coming up. A lot can change from now and then, but just looking historically, Google hasn't closed below the 200-week moving average. And when you did, buyers defended the area and pushed prices back above. So we need to watch what's going on here. And if you're going to take a look from a retracement level perspective, COVID crash low to buying climax, you're headed towards the 618, which is 89. Deep value perceived areas are definitely your 786 and your 886. I'm definitely a big fan of the 886. Just being that this is such a huge mega stock, you could see the 786 and have buyers defend it. You may not even reach the 886, but if you do, you'll definitely probably be finding bids there. All right, taking a look at PayPal, I just think it's becoming more and more apparent that you have distribution happening on PayPal. After a pathetic attempt at a bull rally, after breaking this falling wedge, very underwhelming price action, and as it stands, you have one high, lower high, lower high, lower high. And I do think if you begin to break these historical levels of inflection, support, and resistance, you will see the next level down at 72.24. You are seeing some bearish divergence on your MACD. You have one high, lower high, higher high momentum. So as hard as buyers are trying to push price action back above these highs, you are not able to, and you're forming higher momentum, creating a form of bearish divergence. Let's see if there's any follow through. Caution, you do have earnings coming up, but I do think if you break down below these levels here, you're going to see the bottom of the range here. All right, taking a look at AMD, just had earnings today, and price is up after hours, and you are at a key area. After having this huge markdown from this bearish sharp pattern, where have you landed? From your February 20 pre-COVID crash high. This has been historical resistance, resistance, resistance. Has not been active as support yet. Could this be the time where we usher in support here and we do have a reversal in price? You are working on some bearish divergence on the MACD, but it's a little early to call this matured. You have your one high, lower high with significantly higher momentum building without prices breaking back above these highs here. Let's see what the rest of the week brings. We did just get through earnings, and you've already seen a huge markdown back to your pre-COVID crash highs. This is a place where I would see buyers step back in. This is, let's see on the all-time fib. So from COVID crash to buying climax, you've hit the 786. You are seeing some consolidation below it. Is this a potential bear flag? Maybe. I'll call it a bear flag once it breaks out of its local channel here. And if you do, you're likely to see the 886. And if you're going down to the 886, you're going to see the bottom of the range here. Straight up, straight down, straight up, straight down, straight up, straight down. See what the rest of the week brings. Taking a look at Apple here. So on Friday, we had this huge day. Buying climax came in, 8% up. But what have you done since, right? You backtested the 200 moving average as resistance. You saw the top of this inflection point as resistance. The follow through Monday, you did hold this bottom of the range here as support, but then today broke back out of the channel. And in this level, you just see straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up. Why not straight back down again? You have completed your target one of this bullish bat. Typically when you have these patterns, you have your first reaction, come back down for your type 2, you retest these levels, and then you begin your reversal. So that's what you'd want to look for if you want to have some continuation on Apple for a reversal. As it stands right now, traders are taking profit. For me, I'll be a buyer back down at these levels with stop loss marginally below 134.42. One other thing I was looking at was LAC. So what I've noticed the other day, you weren't able to break out above your 200 moving average on the daily. You back tested it bearishly as resistance again and sold off. Buyers are desperately trying to get back above these levels and back in this level of inflection, but as it stands, you are building one high, second high, one high, higher high on lower prices. You have bearish divergence forming on your MACD. Hasn't fully matured yet, but you do have volume building on selling pressure. If you're going to get rejected here, you're likely to see the back of this range here, which could usher in a potential double bottom. If you come back down here, you'd want to see significant selling pressure with making the same low and higher volume of negative momentum on your MACD to usher in some heated bullish divergence, and that's where one could take a logical shot at LAC. So just looking at Bitcoin on the daily, you have seen some positive price action right now. You have gotten back above areas you desperately needed to be above. Buyers have definitely stepped up in between this range here. You haven't broken down. I do think all of your bullish argument is lost when you break down below 17,614, but as it stands right now, buyers have stepped up. We'll have to see what further price action occurs after this. You could be forming some type of bull flag on the daily, but let's break it down to the 4-hour. So definitely after you have your price markup, you are seeing some consolidation here. I do want to see you get back above 22,611 to continue this reversal. If not, you're just kind of in the middle of a range. Straight down, straight up, straight down, straight up, straight down. And let's see if we can make it straight back up again. Alright everybody, thank you so much for going across the markets with me. If you guys have any requests of something you'd like to see or I haven't touched upon, please just let me know in the comments below. Don't forget, hit that like, that sub, that bell if you want to see when I'm posting some more videos. I know I haven't been as consistent as I want to be. I'm trying to get videos out on Tuesdays, Thursdays, and Sundays. Hopefully I can continue to do that. I really enjoy doing this for you guys, so please just let me know any feedback you have. And until next time, I'll see you. Thank you.